Have you ever thought about investing in Bitcoin? It's a question that's been ricocheting around the globe, causing a stir among both the financial elite and the everyday individual. Bitcoin, with its mysterious origins and skyrocketing popularity, has become a household name. Its intriguing blend of technology and finance has sparked curiosity, debates, and even a hint of frenzy. So what's all the fuss about? Is Bitcoin a wise investment? Today, we'll delve into the pros and cons of investing in Bitcoin. To grasp the concept of Bitcoin, you must first understand cryptocurrency. Picture it as a digital or virtual form of money. Unlike traditional currencies, however, cryptocurrencies like Bitcoin are not controlled by any central authority or government. They're decentralized, meaning they operate on a network of computers spread around the globe. Bitcoin, the first and most well-known cryptocurrency, uses a technology called blockchain. The blockchain is a public ledger containing all transaction data from anyone who uses Bitcoin. Transactions are added to blocks or the links of code that make up the chain, and each transaction must be recorded on a block. But here's the catch. These transactions are not linked to identities, making them pseudo-anonymous. This digital, decentralized, and pseudo-anonymous nature of Bitcoin is what sets it apart from traditional currency. Now that we understand Bitcoin, let's examine why people choose to invest in it. Scene script. Bitcoin, like any other investment, has its advantages. First, let's talk about potential high returns. If we rewind to Bitcoin's inception, it was worth just a few cents. Fast forward to today, and it's valued at thousands of dollars per coin. That's a growth trajectory that's hard to match in traditional markets. However, it's important to remember that past performance isn't a guarantee of future results. Next up is decentralization. Bitcoin operates on a peer-to-peer network, which means there's no central authority or government controlling it. This decentralization offers a level of freedom and privacy that traditional banking systems simply can't provide. It also means that Bitcoin is resistant to censorship and can be a safe haven in times of economic instability. Third, Bitcoin has a limited supply. There will only ever be 21 million Bitcoins in existence. This scarcity is built into the system, and it can't be changed. This limited supply, paired with increasing demand, could potentially drive up the price over time. Another advantage of Bitcoin is its accessibility. Anyone with an internet connection can buy, sell, or hold Bitcoin. There are no banks to deal with, no need for a credit history, and no geographical restrictions. This makes Bitcoin a truly global currency that's accessible to billions of people who might be excluded from traditional banking systems. Finally, let's consider Bitcoin's potential for future growth and acceptance. Bitcoin and other cryptocurrencies are still in their infancy. As they become more mainstream, there's potential for significant growth. Major companies like Tesla and Microsoft already accept Bitcoin, and as more businesses follow suit, it could become an integral part of the global economy. These advantages make Bitcoin an enticing investment, but it's not all sunshine and rainbows. Investing in Bitcoin also comes with its share of risks. The first and most notable risk is volatility. The value of Bitcoin is incredibly volatile, with prices swinging wildly from one moment to the next. This can offer high rewards, sure, but it also means that the risk of loss is equally high. One day, you could be on top of the world, and the next you might find your investment has plummeted in value. Then there are the regulatory issues. The legal status of Bitcoin varies from country to country. Some governments welcome it, others tolerate it, and some outright ban it. The regulatory environment is continually changing and evolving, adding another layer of uncertainty to Bitcoin investments. You could wake up one day and find that your government has slapped new regulations on Bitcoin, significantly impacting its value. Another major concern with Bitcoin is the lack of consumer protection. Traditional banking systems and credit cards offer some level of insurance and protection to consumers. If your bank account gets hacked, for instance, you can usually recover your funds. Not so with Bitcoin. It operates on a decentralized network, meaning there's no central authority to turn to if things go wrong. If your Bitcoin wallet gets hacked, your Bitcoin is gone, and there's little you can do to get it back. And let's not forget the potential for misuse.
Bitcoin's anonymity features make it a popular choice for illegal activities such as money laundering and buying illicit goods. While many people use Bitcoin legitimately, the association with criminal activity can harm its reputation and value. Finally, remember that Bitcoin is still a relatively new and unproven market. It's been around for just over a decade, which is a blink of an eye in financial terms. The future of Bitcoin is uncertain, and while some people are optimistic, others warn that it could be a bubble waiting to burst. These cons highlight the risks associated with investing in Bitcoin. It's crucial to do your homework and consider these risks before you dive into the world of Bitcoin investing.
How does Bitcoin stack up against traditional investments? That's the question many potential investors are asking themselves. Let's start by comparing Bitcoin to stocks and bonds. The stock market, as we know, has been a tried and true pathway for wealth accumulation over the years. It offers a wide range of options from low-risk bonds to high-risk, high-reward stocks. It's also highly regulated, which provides a certain level of protection to investors. On the other hand, Bitcoin, being a decentralized digital currency, isn't subject to the same regulations. This lack of oversight can make it both appealing and risky. When we talk about volatility, Bitcoin takes the cake. Its price can skyrocket or plummet overnight, offering the potential for huge gains but also significant losses. Traditional investments, while they can fluctuate, tend to do so at a more gradual pace. In terms of potential returns, Bitcoin's meteoric rise since its inception has dwarfed those of most traditional investments. However, past performance is not a guarantee of future results, and the high return potential comes with a higher risk. Risk is a key factor in any investment decision. Traditional investments have a long history and are considered relatively stable. Bitcoin, however, is still a young market, and its future is uncertain. In conclusion, Bitcoin and traditional investments are different beasts altogether. They each have their own unique sets of advantages and disadvantages. It's essential to understand these differences and align your investment strategy with your risk tolerance and financial goals. Bitcoin and traditional investments have their own unique sets of advantages and disadvantages. So, should you invest in Bitcoin? We've walked you through the ins and outs of Bitcoin, highlighting its pros and cons. Remember, the potential for high returns comes with a level of volatility that can't be ignored. While Bitcoin has shown resilience over time, its value can fluctuate significantly. Investing in Bitcoin can be a game changer, offering a new way to diversify your portfolio, but it's not without its risks. From potential regulatory changes to the complex nature of cryptocurrency itself, there are several factors to consider. The key takeaway here: do your due diligence, understand the market, keep abreast of the latest developments, and most importantly, know your risk tolerance. Investing isn't a one-size-fits-all affair. It's a personal journey shaped by your financial goals and risk appetite. Whether Bitcoin is a good investment for you depends on your individual circumstances and risk tolerance. Always do your homework before making any investment decisions.